Today in crypto, markets are heating up, and the latest moves could set the tone for months to come. Bitcoin has surged past $116,000. It climbed higher after new inflation data from the U.S. raised hopes. Many believe the Federal Reserve is nearing a rate cut. Traders in both the U.S. and the U.K. are piling in, and the move has added fuel to an already strong rally across the crypto market. Ethereum is around $4,500. XRP has risen above $3. Solana keeps surprising us. Cardano is showing strength again after weeks of weakness. Dogecoin and Shiba Inu are also seeing a meme comeback. Retail money is flowing back to these coins as Bitcoin dominance rises. This is the kind of momentum many long-term holders have been waiting for. The macro backdrop is what's really driving this. The latest consumer and producer price index data showed inflation easing. This strengthens expectations for a 25 basis point cut from the Federal Reserve at its next meeting. Some analysts are even suggesting a 50 basis point move isn't out of the question. Add in weaker job numbers and softer economic growth, and Wall Street is now convinced easier money is coming. And we all know what that means for risk assets like crypto. More liquidity, more demand, and stronger momentum. This is why you're seeing Bitcoin break new ground and Ethereum push toward key resistance levels. But while most of the action is bullish, the whales are stirring. One Bitcoin wallet that hadn't moved in years suddenly sent out over $100 million worth of Bitcoin. A chunk of it landed on Kraken, sparking speculation that a sell-off could be coming. Dormant wallets moving this much usually mean either profit-taking or strategic reallocations. Traders are watching closely because these moves often foreshadow market shifts. Still, the broader trend remains upward, and institutions appear to be holding steady. Coinbase analysts say this bull market still has room to run. Their latest report highlights three main areas of support. Strong liquidity. Favorable regulatory conditions. Institutional demand. Ethereum and Solana are seeing growth due to more developers and renewed investor trust. Coinbase thinks Bitcoin might reach 120,000 soon if the market stays positive. That said, they do warn that volatility will increase, especially if inflation data or Fed comments surprise the market. Politics and regulation are also making headlines. In the United States, the stablecoin law, known as the Genius Act, is already reshaping the payment landscape. Visa, MasterCard, and some banks are exploring stablecoins. They want to use them for daily transactions and cross-border payments. This is the kind of development that could finally take crypto mainstream in the U.S. At the same time, the SEC continues to push for clarity on which tokens should be classified as securities versus commodities. That's hugely important, especially as ETF applications for assets like XRP, Solana, and even Litecoin sit on the table. If regulators give the green light, we could see a wave of new ETFs open up, funneling fresh institutional money into altcoins. Across the Atlantic, the UK is charting its own course. While direct ETFs are still limited, firms like SmarterWeb are finding creative ways to give investors exposure. SmarterWeb has built up a treasury of more than 2,400 Bitcoin, worth over £200 million. The company is expanding aggressively, buying up smaller rivals, and eyeing eventual entry into the FTSE 100 index. It's a reminder that even in a tighter regulatory environment, crypto exposure is still growing in mainstream finance. London's role as a financial hub means UK regulators know they can't afford to be left behind. Meanwhile, gold continues to compete for investor attention. Gold is up nearly 39% this year, beating Bitcoin's 22% gain. For many, gold still feels safer in times of uncertainty. Analysts say Bitcoin is undervalued when you compare it to gold. This is true, especially as global adoption and demand grow. For US and UK investors, an interesting question arises. Will Bitcoin keep closing the gap with gold, or will gold regain its status as the top hedge? Let's talk about altcoins and the next wave of projects, because this is where a lot of attention is moving. One name making noise is Remittix, or RTX, a new PayFi token designed for cross-border crypto and fiat payments. It's been backed by some of the XRP whale community and is already preparing for listings on Bitmart and LBank. A beta wallet launch is set for mid-September, and that could push it further into the spotlight. Then there's little Pepe, ticker Lil Peep, a meme coin that's building more than just hype. It's rolling out an EVM-compatible Layer 2 network, adding anti-sniper protections and promising low gas fees. It started as a joke, but is evolving into something much bigger. Arbitrum, one of the leading Ethereum Layer 2s, continues to see strong traction as developers pile into its ecosystem. Usage is climbing, and its ARB token is catching fresh momentum. Pudgy Penguins, known first as an NFT brand, is pivoting into mobile gaming, creating a real use case beyond digital art. If they can pull this off, it could set a new template for NFT-born brands. And don't overlook Maxi Doge, a brand new meme coin presale that's generating buzz among retail traders. High risk, high potential, but the hype is undeniable. Of course, we can't ignore the caution flags. Bitcoin is still facing tough resistance near 118 to 120,000. Every time it gets close, sellers step in. September is also historically a weak month for crypto, though this year the pattern seems less pronounced. And there's still the possibility that the Federal Reserve surprises markets, or that a sudden whale sell-off triggers a cascade. Even Coinbase has warned that volatility could spike in the coming weeks. Traders should stay alert. Looking forward, the key events to watch are clear. The upcoming Fed meeting will likely determine the short-term path of Bitcoin and Ethereum. If the Fed signals aggressive easing, the rally could extend much further. At the same time, keep an eye on ETF applications for XRP, Solana, and Litecoin. A single approval could unlock billions in institutional demand. And watch the whales. Where they move their Bitcoin, Ethereum, and stablecoins often signals where the next leg of the market is going. For investors in the US and UK, now is the time to reassess exposure. Are you too heavy in meme coins? Do you have enough in large caps like Bitcoin and Ethereum? Or are you spreading into pre-sales and riskier projects like RTX, Lil Peep, and Maxi Doge? Diversification matters. Setting stop losses, managing risk, and keeping some cash ready can make a big difference. They help you enjoy the bull market while avoiding trouble in the next downturn. As we close, let's recap the key numbers. Bitcoin is trading around $115,000 to $116,000. Ethereum is stable near $4,500. XRP sits above $3. Solana is showing fresh strength. Meme coins are alive again, but remain volatile. Gold is still outperforming on the year, but Bitcoin's adoption curve suggests more upside ahead. The macro picture is supportive, with inflation cooling and rate cuts coming into view. And regulation in both the US and UK is finally catching up, which could drive even more mainstream adoption. That's the state of the crypto market today. It's fast-moving, full of opportunity, and full of risk. The next weeks will be decisive. If you're enjoying these updates, make sure to like, subscribe, and turn on notifications so you don't miss the biggest stories as they happen. And drop a comment below. Which altcoin do you think has the best shot right now? Is it Remittix, Lil Peep, Arbitrum, or something else entirely?